Hey, what's up, guys? What's going on? So, today I will discuss whether you should buy or sell Apple at this point of time. Today is June 27, 2025. So, in this point of time, at this point of time, Apple is $201.08. Let us consider whether, from the fundamental point of view, from the relative valuation point of view, should you hold Apple or not? Before that, like here I'm in alpha spread, so here I will show you from relative valuation whether you should keep Apple or not. So worst case $157.99, base case is $186.42, and best case is $206.17. So it doesn't look promising from this point of view. So it should be $186 while it is $201. So it means the stock is overvalued. So let us dig deeper into it. Valuation multiples, let us consider now. So what about price to sell? So the price to sell multiple says that Apple is 31%, like 69% of the time it was less expensive. It is more expensive than 69% of time than own history. What about industry? From industry standard, Apple is 87% more expensive. Okay, 13 means 87% more expensive than industry standards. Okay, so this is not a good sign. What about P ratio? So in P ratio multiple standpoint, Apple is 67% more expensive than 67% of time than its own history. So it is in bad shape. What about industry standards? From industry standard, Apple is 83% more expensive than of industry standard. So 83% stocks are less expensive than Apple. So it is in bad shape. What about price to operating cash flow? So it is again it is more expensive, 81% more expensive than our own history, and 81% more expensive than of industry standards. So it is terrible shape. What about price to free cash flow to equity? So here also Apple is 77% more expensive than of its own history. So what about industry? In industry it is even more terrible situation. So 83% of the industry is in better shape than Apple. So from four valuation metrics measures, it is failing. So what about others? So price to book is another most important valuation valuation tool. So from this standpoint also, Apple is in terrible shape. It is more expensive than 72% of the time of its own history. What about industry? It is in super terrible shape. You can understand from here. Industry standard is 3 times of the book value should be the price, while Apple is 40% times more than its book value. So it is like, it's terrible, right? It is in terrible shape. If you consider from price to book perspective, okay, it is in terrible shapes. Therefore 99% stock are cheaper than Apple in the industry in respect to price to book. So this is a bad thing, a really bad thing. What about enterprise value to sales ratio? So in this ratio, Apple is more expensive than of its own history in 69% of time. It was less expensive than today. So it is in terrible shape. If you can compare with industry standards, so 87% of the industry stocks are less expensive. So tech stocks in general are way less expensive than Apple in respect to the six valuation multiples that I have discussed. There are more, but I'm not going to each of every of the multiple. Almost everything is indicating the same thing, that Apple is overvalued. So Apple should be trading in premium. It is true, but not like this way. Like today, it is in premium in all the respect. It is not a good shape. Okay, so I believe Apple is currently, the price of Apple is higher than it should be. It is overvalued. Okay, so that is what my opinion is. But it doesn't mean I am I am going to recommend you an investment decision or something like you should sell Apple. No, I am just here to give you some ideas so that it assists you in understanding what's going on. Okay, so thank you so much for your patience. Have a good day. Bye.